Hi everybody, my name is Adya and today we have Mr. Akshat joining us. He is the Assistant Vice President of Choice Wealth Private Limited, which is a company in the finance spaces. He helps people analyze market trends, guide them for investments, and also help retail as well as big investors find their way through the finance domain. So if you're just starting in the stock market journey, or if you're interested to learn more, we have some insights for you from Mr. Akshat himself. Hello, sir. So we'll start by knowing a bit about you and your journey. Like, how did you get into this domain, and like what excites you about pursuing this even today?
Okay, so that's happened way back in 13-14. So being a Marwadi, Rajasthani, I always had this. My parents had interest, that we want that our children should become a chartered accountant. Okay, and being a Marwadi, also love numbers, right? But when I went to do CA and started my journey, I realized that I did not have so much interest in auditing, taxation, and I realized that maybe I'm not for this field. And I even tried for CA, but I always knew that I'm not for this field. And meanwhile, I started founding my interest in the future. If you see, accountancy is about the past. You're accounting what has ever done. But I was always excited and tempted, that how I can change the future and how I can, make decisions based on the futures, right? And there I started learning about the mutual funds and other investment options. Why are bank FDs are poor, and why other market spaces like financial market, mutual fund, ETFs. So I started taking my interest. And when I just dropped out of CA, I started doing CFP, that is Certified Financial Planner.
For sure.
So it's also a US-based certification. And I started my journey in learning about the markets, interest rates, rate of return, compounding interest. So here I started my journey. But I completed that in 2018. And then I realized that, I have to do something more big in the terms of finance. I did my analysis. I had worked with my mentors. I talked with several education consultants also. And they guided me that if you want to excel your career in finance, then CFA, that is Chartered Financial Analyst, is the epitome of it. You try for it. And, I started enrolling for CFA. To be honest, for the very first time, I found it difficult. But at the same time, I found it very exciting. Because the best part about the course was that you don't have to mug up, right? When you're doing other courses, you have to mug up things, mug up rules, mug up provisions. But when I was doing CFA, I never felt that I am, rectifying anything or mugging up things, right? So that's how my journey started with CFA, learning out markets. I joined a company also meanwhile, and I was applying what I was learning in CFA. So that's a rare combination, that whatever I'm learning in my CFA journey, I was applying practically for my clients, right? So that's how I got my journey into it. I completed my CFA, and then, now working in the wealth management space. So that is the basic roadmap that I passed through. And, I'm just trying to excel my skill set more into the terms of, treasury management and, in the field of investment management. And I'm working like that way.
So the analysis and like the implementation still forces you to continue in this door.
Okay, so the thing is that in financial markets, you have to learn every single day. You can't say, see, I have done CFA, I have done this skill set, now I'm done with, I don't need to learn anything. It doesn't happen like that.
Mm-hmm.
In financial market, even if you're not reading the markets and not catching the markets for even 3-4 days, you are out. It's so integrating and it's so dynamic that every single day you should be updated. What's happening in the US, what's happening in the US, what's happening in Europe, and how Japanese markets are behaving, what's happening with China, what's happening with the Chinese government, why auto stocks are falling, why pharma is giving a new momentum. Every day, every single minute, you should be updated what's happening in the financial world. And that's why I feel that in the financial market domain especially, learning doesn't stop anytime. And you should keep learning. If you don't learn, you will be outpaced by those people who are doing it very dedicatedly.
Yes.
Okay, great. That was great. So we're still excited to. So that's learning keep you going, right?
Yeah, learning is the only option I think, you should have in mind. Because if you stop learning, whenever you sit with other fund managers, whenever you sit with the investors, I tell you what is the problem. Thank you asked me this question. For example, when I meet my clients nowadays, okay, I meet my clients and my clients are very much aware. Sir, what's your take on the US Fed rates? Sir, what's your take on the, real estate crisis in the China? And I'm surprised. How does these clients does know about the markets really well? Because financial literacy is not just a want now, but a necessity. Everyone is earning money, but how to invest it. It's a part and parcel of our lives. And when I meet the clients, ultra HNI retail clients, a client who is doing 1,000 rupees SIP with me, he's asking me, "Sir, what are your thoughts about the interest rate changes?" And I'm shocked and surprised that this fellow is just putting 1,000 rupees and asking me very different question in the markets. And that is something I realized, in India, financial literacy is taking up the pace. And now you can't go for the investor. They know everything. So to make smarter decisions, you should be updated every single day, because your client is updated. If you are not, and if you tackle your client and you don't know things about the market and you are not updated about the things, it will, you will be outpaced by other smart financial advisors.
So when it comes to learning, like everybody wants to know, how do you step into the stock market domain? Like, what is the first step you do when you decide, I want to start investment?
Okay, so I think it should start with the very basics. First, you have to get yourself in a thought process that if I'm entering in this stock market, with this thought process should be very clear that I'm entering not to speculate, but to make money. Okay? Like you must have heard from your parents, and I also heard from my parents. They will tell you various stories about their relatives, that how their relatives, lost their bungalow, lost their car in the stock markets.
Yeah.
But nobody tried to understand the reason of it. The reason was quite simple, because those people speculated a lot, right? So if you're coming into the stock market, the very first, when you open your demat account, before that also you should have that mentality, I'm coming to stock market to use my brain and make money. If you're coming with this further, I want to make money, you will speculate many times, right?
Yeah.
That is one of the biggest mistakes. So first thing for me is that you should come with the thought process, I will use my brain, I will use my analytics, and then, start investing and then make money. Okay. Second thing, basic things. You have to get a broker with you, and, a broker will definitely guide you to open a demat account, get the checks done, and, make your account ready.
What is the first step? How do you enter the market itself?
For investments?
But the stock market and just first step toward.
Okay, so it's a basic KYC is done. It's a know your customer. It's a government approved guideline where you have to, you should have your PAN card, Aadhaar card. Okay, these documents are required to open your demat account. So let's say today you say, I'm very motivated for Indian financial markets and I want to start investing. So the very first process is you have to open a demat account, because the demat account, the trading account is necessary to trade. You think that HDFC is a good stock, but you can't make money in your mind, right? You have to put the money. So for that, you would be needing a broker and demat account where you will you need to have some PAN card, Aadhaar card, cancel check. These are some basic requirements. With that, a broker will open your account maybe one day, 2 days. Today the process is very fast. Maybe in a day they will open the account. And once the account gets ready, you should start putting some money. Let's say you should have some capital, right?
Right.
Whatever the capacity you have, 10,000, 20,000, 50,000, 1 lakh rupees, whatever the capacity you have, you should have that broker account ready. Put the money in the broker account and then you can start taking the trades. Okay, so this is the very first basic step. But if the account is ready and you are, in the mindset that I want to make money, but before that, you should have some strong reasoning. Let's say if you want to buy a stock, today you say, I want to buy the HDFC stock, then you should have some reasoning behind it. That why do you want to buy the HDFC stock, right? Why the stock hasn't performed in the last 3 years? If you see if you should have the database ready, your analytics should be ready, right? You should analyze the company also, that what the company is doing, how many new branches HDFC has opened, what is the feedback of the customers on the services they are providing. Everything you should know. And once you do this research and due diligence, you should start investing. But what I would suggest, take help of some financial advisors. If some people are involved in this financial advisor, and they can guide you well about the market selection.
Like, how do you know if this person is trustworthy to become your advice?
Okay, so for that you can, what you can do, it's a very simple basic exercise. You can go to Google and you can search on the best family wealth offices or simply financial advisors that are related with the brokerage firms, right? So being a choice is also a broker. So we are also very good financial advisors who keep interacting with media also. They have a media presence also. Their recommendations have done really well also. So you can do the analysis. That's a very good question. You can do the analysis of the financial advisor also. If this financial advisor has recommended what and what their clients are saying about them.
Yes.
Is he just giving the stock recommendation or financial advisory in a fluke, or he has some reasons, logics behind it? right? So you try to use their feedbacks, and you can get the past records also, and on that basis you can finalize a financial advisor. They will help you to design your investment plan. You see, for example, how it will start. It will simply start with asking questions to you that if you want to invest, what is your investment goals? What is your horizon? You want to invest for the short term, mid term, long term? A client, a financial advisor would ask you this question. Like, imagine if you're going to a financial advisor and you're saying that I want to put 1 lakh rupees, and he's just giving some stock that invest in the stocks.
Yeah.
That is the biggest red flag of a financial advisor. That he is not asking you that who are you, why you want to invest in that.
He didn't analyze you itself. How?
Not analyzing your stuff, right? He's not making proper investment plan for you, a tailored investment plan for you. But what a good financial advisor would do, he would ask you questions, right? What are your investment horizons? How much risk tolerance you have? Do you have any liquidity needs? This smart question a financial advisor would ask, make a comprehensive investment plan for you, and accordingly suggest you that how you should start investing, and send a plan and customized plan for you, and then accordingly you can start investing in those stocks, mutual funds, and whatever assets.
But this is then again a very higher level, right? It is like a student level for donating. So, like for in my campus itself, we have a lot of apps where people participate and like win 100 rupees a day with just stock knowledge.
Right.
So, what will you say for that student base?
So I would say, like, I keep interacting with students, and I understand, you said it very correctly that it's not possible for students to go to financial advisors. What they can do their own. So very basic, simple thing. If a student wants to invest, try to learn the stocks that are presented in the indices. For example, BSE indices, 30 stocks are there. Nifty indices, 50 stocks are there. But try to learn about those stocks. Read the balance sheets, right? To have a balance sheet, it's very accessible. You go to BSE website, type the name of the company, they will give you the balance sheet, annual reports, and read the balance sheet. Right? If the company is making profits, if the company is having assets, right? And you will also learn about the management analysis. So there are some management commentary on the stocks, right, for their companies. In the next quarter, we are planning this new branch, we are planning this new product. So you will at least get a learning about it, that how this stock performs and how these companies are, expanding, and what is their future outlook. So this is the very first step for all those students who want to enter into the financial markets. Start reading the balance sheet and annual reports of the companies. Start reading the management future commentaries, that how they see the company growing and how it will plan out. So that is the basic research a student should do to start the investment process.
So next thing is like emotional reasoning, right? It is a very important skill in many companies now, but like for stock, it is not the best thing to implement. You have to be analytical. So not being emotional is important in a stock domain. So what else should people avoid when they are investing or like analyzing, and like what are the mistakes that people do that they should not do in the beginning of their journeys?
Okay, so you pointed out very nice question, and I read about it, this particular part, in my level 3 curriculum when I was reading, when I was pursuing CFA. That is called investor bias.
Yes.
Right? It's simply a bias about a particular stock, about investment decisions, right? You have bias regarding different things. Okay. So for example, I'll just give you a very practical example. Like, I've seen my friends buying cryptos, buying bitcoins. That is a very famous asset nowadays. Only because their friends are buying in that.
Yes.
Right? They do not have the logic. A friend of mine literally invested 7 lakh rupees in the Bitcoin, because the Bitcoin was trading a lot, okay, that time. And, he invested his hard-earned money in Bitcoin. It said, my friend said, this 7 lakh will become 20 lakhs in next 1.5 years, okay. And then we saw Bitcoin crashing, and the value went down to around 1.5 lakhs. Imagine, that was his hard-earned money, maybe needing for his family needs. And because he got so much greedy, was not able to control his biases, and some friend suggested he invest in the Bitcoin, and he invested, right? So what I would suggest, to counter the emotional bias, first you need to stop herd behavior. What does herd behavior means? That if other people are buying the stock, I will also buy the stock. That is the most wrong strategy that people invest while investing.
Okay.
What I would say, even 80% people today are investing on the basis of recommendation that other people are giving. Even they are recommending, but they are not asking them the question that why are you suggesting the stock? They simply say that buy the stock, and they will buy the stock. They're not asking the question that, sir, why are you suggesting this stock? What is the reason behind it?
So
right?
no logic, no.
So to counter emotional biasness, okay, and the investor biasness, you should always perform your due diligence. Your research should be there. Then only you can counter emotional biases. You know what happens? Sometimes market falls and you feel like I want to sell my stocks, right? You feel that feeling, but you can use that brain your time. If this market fall is a buying opportunity for me,
Right.
because I know as an investor, buy low and sell high is the golden rule for the investments.
Right.
So if I use my brain and it's the buying opportunity for me, right? So that decision, that thought process, you should have in the mind. Instead of being panicked, instead of being emotional, instead of not having being practical, you make wrong decisions.
Yeah.
If you see many people are making losses, quite a losses, only because they're emotionally so unavailable and emotionally so vulnerable that they can't control their biases, and they're buying because their friends are buying, their friends are selling. Okay, some tips is coming in the Telegram group nowadays. Nowadays, Telegrams have hundreds of groups where they are claiming that with their tips you can be a billionaire, right? But to be honest, it doesn't work like that. So my ultimate crux on the emotional bias thing, your due diligence is the ultimate source where you can counter the emotional bias and you can make investment decisions smartly by reading balance sheet, by reading P&L statement, by reading cash flows. Okay, and if someone is suggesting you some stocks, ask them the reason. And if the reason is very logical, then you also give a thought on that reason first. And if you feel that the input is very solid, then you should think to invest in the stock or that particular script.
But how much do you think it is luck factor also that something pans out well for you?
To be honest, I believe in luck, to be honest. Buying a right stock at the right time is a luck. I'll tell you how. Like some people bought a particular stock before 2007 crisis.
Okay.
And some people bought the same stock after 2008, 2007 crisis when the markets fall. There is an enormous amount of difference between the returns they made between the investor A and investor B. Because in 2008, markets fall off around, let's say, 40-50%, right? So the investors who bought after the crash, he made more returns.
Oh.
Right? Because he got it at a very low price, right? So maybe it was a kind of a luck also. When you bought this particular stock, and that time the stock went off, right? You bought the right stock. You know that the company is good, company doing great. But suddenly there was a fire in the company. It's not controllable, right? So I know one of my friends investing in the stocks and future of that stock. He bought the stock, he analyzed the company really well. But after a few days, he got to know that there is a fire in the company.
That's unpredictable.
And he made losses. And what's his fault in that? Nothing. It's not controllable. It's luck.
Yes.
That the company you bought, okay, it got by fire and I bought it's doing good. So it's not about the investment skills. Yes. We both find the right stocks, right company, right sector. We did the complete research. But because your luck was bad, your company, got a fire your inventory burned up and you lost the money in that. So I believe, yes, luck is involved in that. But the best part about investment skills is that with knife sharp skills where you can reduce the factor of luck in your investment journey, right? Okay, so if you work hard, if you, use your analysis, you can reduce this factor of luck, but luck would always be there. You can never eliminate the same.
Okay. So now AIML is in like every field, right? So stock market will also have their own set of shares. So what I want to know is how much dependence of artificial intelligence is good for the stock market, and like where should it stop, or like it should not stop at any point?
Okay. So there is not a black and white answer for it, to be honest. Like I can say that AIML is very good. I can't say AIML is very bad. So there are two sides of the coin. First thing, this is the very harsh truth that AI and ML are taking over the world. They're taking it aggressively. Okay? Malab, you can't imagine that, all the industries, AI, ML is basically coming out of the tech and IT sectors, right? It's coming out of your institutions. But it's being implemented across all the sectors. You see, automobiles, yes, it's being implemented. It's e-commerce is being implemented. It's financial service is being implemented. How financial services are being, using AI, they're using it to understand, predictability of data. Like if you got the data, then how this particular data performed in a particular investment scenario. For example, I want to understand the 5-year economic cycle from 2007 to 12. So I'll use the data and understand how this particular stocks performed in this particular macro environment. Imagine I want to analyze that how Reliance performed in this particular dot-com bubble. Okay, I want to analyze how HUL, ITC performed in COVID crash. Okay, so that data will really be helpful, and it will help me to make my decision really well. So I believe in that way that it's very good that you analyze the data and it can help you to predict the future based on data. But the problem is that it's still the machine. It's still the algorithm. Okay, it should be correct with our biases, but human judgment is also necessary, right? So,
Also, like, because it is learning from a previous model, how dynamic can it change
Right.
itself to apply on a regular?
right. So that's what happened exactly. I'll tell you the exact reason. I'll tell you the example. So when COVID came for the first time, so many people predicted that market will crash for the next 1.5 years, 2 years, because this crash is combined with the economic disaster plus medical disaster, right? So they had this thought, but something like that never happened actually. To be honest, both combining in 2008, what we saw, it's basically economic disaster, right? Subprime online prices, and COVID was a very black swan event. People we are taking advice from, they have never seen this event, okay? And they could not predict it, okay? Or there was no data, and they said the market will fall. But market behaved in a very dynamic environment.
Yeah.
And the market took off. Imagine when economic disaster coming up with a medical disaster, what they would thought, Nifty will go to 2,000, Sensex will go to 10,000. Market rallied up like hell, to be honest. Market gave enormous returns.
Like in electronics domain.
Yes, if you see the levels of Sensex and Nifty today, Sensex is at 77,000 after the fall right now in the next 2 months, and Nifty is somewhere 23,000, right?
Yes.
And they went up to 8,000 and 26,000 levels in the COVID level. Nobody thought that market will behave like that because it was a very dynamic situation. Never happened ever before, right? So that thing can't be predicted with AI and ML because sometimes human judgments are involved, right? If Corona is there, people will move towards healthcare. This particular segments can, show some interest because people will be having in home, consuming more stuff. So that time human judgment is involved. Maybe human brain can do it much better than compared to AI and ML. But yes, I would say I'm biased. If you ask me personally, I'm really biased towards AI and ML, and I would always encourage companies, myself, and everyone I talk with to use AI and ML to have the better understanding of the data and everything.
Okay. So it's a good thing when it is used in check, right?
Yeah, at a limit. See, everything has a limit. If you're going out of the limit and just solely depending on AI and ML,
Over-reliance.
you will have the setback definitely. If you completely being independent on the basis of AI and ML, you will get the tight slap on the face because you can't predict the machines and you can't predict the environment we are in. Right? We are in a very dynamic environment currently.
Right. So one of the questions is like, how do you when a market is good, and like what is a concerning market state that you should avoid or like be very mindful of? And like if that happens, how do you deal with it? And like what are the coping strategies for a student and like for a normal person who wants to put investment?
I'll tell you. First thing, nobody on this earth or even nobody can predict the market.
Okay.
I'll tell you, I keep interacting with all the top minds in the industry, all the fund managers. And the question you asked me, I asked the same question to them. What do you think about the markets? Where will the market go? Do you think market gonna crash? Do you think market gonna go up? Right? And I asked them this very same question. And what answers I get is simply you can never predict them, can never predict the markets. But the thing is that you can always understand the dynamics that what they are going in and make your asset allocation accordingly, right? So being a student, I understand you have this curiosity about the markets. But to be honest, if it is possible to predict the market, there is no need to study. There is no need to sit here and everyone but put their money and just earn money. No. What happens exactly? You should set aside the allocation. I'll tell you. Like I just give the example. What in a COVID situation, people thought that market would crash and they will crash for a very long term, not just for some months. Market rallied up. So according to that situation, when an economic crisis is there, when credit crisis is there, liquidity crisis is there, combined with the medical crisis that you can't get out of the home. So a normal person would tell you that market will crash for a long time and it will take a long time to recover. Right? It didn't happen like that.
It went off.
It went off. So if you ask me this question, is that if the market's not doing well, so I understand these points are completely valid.
It's not about predictability, but like you can see it currently, right?
So what you can do, you can work on the valuations level. So whenever you invest, you look at the BSC level, you look at the Nifty level, you can check the valuation ratios. There are many valuation ratios, right? So you can look at the mid cap stocks, you can look at the small cap stocks, and there are valuation levels. There is a ratio called P ratio. So with that, you understand that how much overpriced the asset is, okay, and what is the valuation of it. So if you understand that the valuations are quite expensive, so you can try to avoid those stocks. But I tell you, it doesn't happen like that in this current environment. I have hundred of stocks, I can tell you, with a very high P, but still they are moving up because with the dynamics we are in. But there are no clear cut rules. But yes, if a recession is coming, there is no productions that are going in the country, right? Companies going through a political environment, right? For example, I'll tell you, China, for example, China is facing, in the last 1.5 years, they are facing real estate crisis combined with the financial crisis. So that you can think to understand, yeah, there is some literally financial crisis going in this country. They're having some real estate issues with them, right? And that's why the stock market is also falling. So with that predictability, you can analyze the markets, right? But sometimes your analysis can't work, and sometimes it can work, definitely. So what I would say, I like in the last 2-3 years, I remember I never invested in China because I could read the reports, I could read what's happening in China, what regulations they are coming with, how business is being very difficult for the investors there, and with those thought process, a rough idea would come to you that where markets are going.
Right.
Just be updated with the news sometimes, but I still tell you that there is no guarantee that your analysis will result in a 100% profit strategy. It will just can give you a brief direction. It can go opposite of it as well.
So now we are part of ESET, right? So we are pushing people to entrepreneurship basically. So for an upcoming entrepreneur, like if so what are like pros and cons of like an IPO basically with the stock market perspective to push your company to the business level? Like,
okay,
say for them.
So one of my relatives has also started in MSME, okay, few years back. And earlier they had a thought that why there is a need to get listed on the stock exchange, right? And I'm doing good, I'm making profits, my company is making profits. But later on he decided in the last year he decided to go public. So I asked him that, what was the reason that you changed your mindset? So he said it very clear that I want to be credible. If I'm coming on a stock exchange being listed, and I have to go with so many approvals from SEBI and other approvals, and I'm being listed on a stock exchange, it means I'm credible. Okay. First, second thing, that company is visible. If that company is becoming a part of indices or it's a public traded company, it's visible to you, it's visible to me, it's visible on the websites, right? So credibility and visibility is really a good reason that entrepreneurs looks for it, and they want to raise more capital, right? So to raise capital in a very transparent way, stock market is a very good place where you can list your company, you can access the capital, you can also tell them the reasons, right? When you list your company, you have to give that thing, where you would use the capital, right? And you list down that and everything in the memorandum that you will use the capital to enter into new market lines, into new product lines, you are opening a new branch, whatever it is, right? So a more credibility and visibility comes with that, okay? But they should also keep in mind that once you get listed, so other people will also having equity stakes in your company, right? They are buying the equity stakes, and once it gets increasing at a very large stake, some control can lose. You can lose some control, some part of it, right? So you should be aware of both the pros and cons whenever you list. But yeah, in the Indian startup ecosystem, I would suggest that all the entrepreneurs who are just having good profits in the company, making good profit, have a very good visionary plan for the business. They should look for listing in the coming years because the markets are really good, and you're a diverse shareholder base, so it is always visible and gradable for your company.
And so it is beneficial if you have a base for your startup.
100%, it's a very good idea.
Okay, so that was all. But do you have any closing advice for our viewers that you want to give who want to start as intervene?
For the investors?
But anybody who's watching who wants to become financial leader.
So with my experience, I would tell you that it's not a rocket science. It's simply your basics. If you simply read about a stock, read the balance sheet, read the annual statements, read about, how companies are doing, performing. And one advice that I would request you, do not follow random tips on Telegram. Do not follow random tips from your friends. Start using your own brain, start using your own analytics, and then start investing. You can make a long-term money and come for a long-term span. If you're coming for 6 months, 5 months, nothing will happen. Okay? But if you want to use stock markets, you can make good money, but you should have an horizon at least 3 years, 5 years, 7 years. And then you can make a very good money with solid research. So that was the main thing I would like to convey to all who are watching this.
Buying low and selling high should be.
Buy low and sell high is the golden rule. You like, if you even got a good company, but if you're paying a very high premium for that, you will make losses, right? So golden rule is that buy low and sell high, and you make great money in stock markets.
That's it for today. Thank you so much.
Thank you for inviting me. Thank you.
Pratap.